Hello, everybody. It is October. My name is Lee Abraham with the Shapiro Group. Very excited to bring you our monthly market report. And we have a very special guest today. Please welcome Elizabeth Riley. How you doing, Elizabeth?
I am greatly. Thanks so much for having me today.
Absolutely. So for many of our viewers, this will be their first time meeting you. Tell us a little bit about yourself, Elizabeth, and your relationship with the Shapiro Group.
Sure thing. So I have been in the business about 19 and a half years. I got started in Atlanta, Georgia. My husband and I were investors. And so my CPA said that one of us had to get our license, and that was me. So I did not really understand real estate or the market. I just understood real estate from an investor standpoint. And so I got my license and was with a brokerage that I learned a lot from and realized this is awesome. I love this. I love helping people. I love navigating all of the ins and outs of real estate. And if any of you were in real estate in 2008, you remember what happened there. And in 2008, we were transferred to Austin, Texas. So, very different market at the time. I actually saw it as opportunity. Austin was a better market. Atlanta had burst. We were doing short sales foreclosures in a much different way than what was going on in Austin. And so, was licensed here in 2008, got started here and started building from the ground up, not knowing anybody, and people were still buying and selling. And I built my business just getting to know my sphere and people in and around my neighborhoods and around the city. So I have been in Austin real estate since 2008, and my business is 100% referral. And I love Austin. I love everything about it. It's such a great place that people want to come to. And the Shapiro Group, you guys are amazing. I mean, y'all are incredible with referrals and our referral sources. You're incredibly knowledgeable in and around the city with the stats and the numbers and the historical data. And we got to meet David years and years ago. And when you guys started the Shapiro Group, we got to pull you into the fold as well.
Awesome. Good. Well, we're super excited, as I said, to have you here today and get some of your insight into the current market compared to how it's been over the past 20 years or so. And so let's go ahead and dive in. We'll let the stats do some of the heavy lifting here. We always start out by taking a look at the number of active listings in the city of Austin. So these are single family homes, detached homes in the city of Austin. And we take a look at how many active listings there are at the start of each month. So we can see here that at the beginning of October, there was just under 3,000 current listings. And we can see that for the past 5 months, there have been more active listings than at any point over the past couple of years. So we are keeping a close eye on the inventory, the number of active listings, and how does that relate to supply and demand? Ultimately, how does that relate to the pricing for a home? Is this a good time to buy? Is it a good time to sell? So we can see that there's been a decline in the number of listings over the past 4 months. And when we go into the next several months into the fourth quarter, it'll be interesting to see if that trend continues as it typically does historically. So fewer active listings at the beginning of October than the previous month. And then here's how it breaks down, Elizabeth, when we start talking about monthly housing inventory. The actual number of listings is meaningful, but what really matters is how does the number of listings relate to the number of sales? Is the actual inventory or the monthly housing inventory moving in the same direction? And here we can see the number of sales per month. The average over 12 months was just over 650 sales a month. Then the past 3 months, about the same. Last month, the number of closed sales really dipped down. And as a result, you've got those 2,993 listings. Divide that by 530 sales a month, and you've got about a 5.5 month inventory. There's been a big uptick in pending sales over the past 30 days, right in line with the 12-month average, and that translates more to about a 4.5 month inventory. So as we interpret this data, we're basically saying that the monthly housing inventory is somewhere between 4.5 and 5.5. And we know, Elizabeth, that a balanced market is typically defined as a 6 to 6.5 month inventory. How does it feel to you and your work with your clients regarding the number of listings for sale and the overall velocity of sales in the market here recently?
I like seeing the stats like this because you can kind of see the longer term instead of the shorter term pain. And I think when you were saying there was an uptick in listings, I think that's with people just anticipating the rates, and they had all these expectations that I don't think really panned out the way they had planned. But I think this is typical for our market this time of year. I think that buyers are being a lot more, they're taking a lot more time to make decisions. There are a lot of listings out there, and if those listings aren't exactly what they're looking for, they're fine waiting until there's something else that comes up. And we didn't see that for a while, but because of those few years where the market just went absolutely insane. But that's not typical. If you take those out, I think our market is performing similar to what it typically performs in October, November, December timeframe.
Makes sense. I agree. Here we can see the monthly housing inventory over the past few years. And when we look back a few years ago, when David and I first started recording these videos, there was less than a month's inventory. And that's that crazy seller's market that you were talking about, with runaway price increases and an unsustainable trend in valuations for properties. And interest rates went up, the housing inventory went up, and you can see here that we're right about where we've been for the peak over the past few years. So from my perspective, looking at the long-term picture, this is kind of the new normal. Somewhere between 4.5, call it 5 month housing inventory. And if we know that a balanced market is somewhere in the 6 to 6.5 month housing inventory as a balanced market, we're still technically in a seller's market. And I know a lot of people, Elizabeth, that have been here in Austin doing real estate for the past few years, it feels more like a buyer's market, but technically still a seller's market. And here's the number of sales per month, and I'm interested to get your perspective on some of these past years. We can see that 533 sales, closed sales over the past month. That's down year over year. Last year at this time, there were 663, still a relatively anemic number compared to prior years, and also a bit of a dip from the previous month. So just under 20% down year over year and over 20% down month to month. Elizabeth, just talk a little bit about, September, October, the past few years. How does it feel now versus, say, 2020, 21?
Oh, 2020, 21 was not fun for anybody. That was not fun for sellers or buyers or anybody in between. And again, I think those were outliers that you have to remove from the historical data because that was atypical. And I think a lot of sellers, we've had lots of conversations with our sellers as far as pricing it right, being ready for the market, understanding the numbers, and those sellers that will follow your guidance and experience typically sell really well. There are still a lot of sellers out there that have dug in their heels and they feel like the prices are going to skyrocket again or go up again, and they're pricing incorrectly. Yes, that's partly sellers, but I think that's on the agents side too. The agents are the hired professionals. They're the experience. They have the data. And what we're telling sellers right now that is they aren't following our guidelines. They're going to sit on the market longer. They're going to be stale. Days on market are longer anyway right now because it's the fall. And some of them we just can't work with them right now because they're not being realistic to get their home sold and priced to meet the goals that they have for themselves. And then what happens is they get frustrated, and then you're having to go through the process again at a lower price, or you're chasing down the market. So I'm not surprised that the sales year over year and month over month. I think there were a lot of listings that started going up again for anticipating the rates. There's a lot of things that happen in election years, and it's not one thing. I think there's kind of a perfect storm right now, and people are going to wait. And there's a number of clients we're talking to right now waiting to see what the spring market does. I don't think it's going to be that big of a change. When they were talking about the Fed lowering the rates, people misunderstood that to think, oh, we're going to have huge interest rate drops. And that is not what typically happens, and that is not what happens. So I think we're going to have a little bit of the same in the spring. But I'm not surprised by this because I think expectations were set incorrectly throughout the whole start of 2024.
Are you saying that the national media has exaggerated and kind of created some clickbait headlines to get people to read their content?
Would I ever say something like that? That never happens in the media, right? No. I think that's why it's so important to understand who you're aligning with, making sure you are working with professionals that do this in and day out. And a lot of the media too, with the some of the settlements and the things in the real estate news was misconstrued as well and misunderstood. And so then you have a lot of buyers and sellers that think that they can do all of this on their own, which starts, going down the wrong path. And it can be very litigious in our industry. So you really need somebody that understands the numbers, understands the market, making sure that you're getting the value out of your home or paying the right value, and not just listening to media. It's very hyper local as well. That's why I love our group and our company, because we're talking on a national scale, because the real estate's going to look very, very different, but we have an understanding of that. But we also are hyper focused on what's happening in Austin, which operates differently than around the country.
Absolutely. And we've gone so far as to hang our hat on super hyper local. So let's get granular. That'd be a nice t-shirt for us to make.
There you go.
Average sale price, Elizabeth, it's up. The average sale price is up year over year, marginally, sure, 0.3%, but by golly, it's up compared to last September. And again, this is the average price of detached homes in the city of Austin. And we can see a dip compared to the last month's figure, 829,000. So we're coming in right at 783,000 is the average price in Austin for single family detached homes. And when you look at the national media and value trends, pricing trends, invariably they're going to be comparing the current number to the peak number. And so the peak in Austin was May of 2022, over 912,000. And any other number compared to that peak is going to show a downward trend. But we typically look at year over year, month to month, and we can see that we've had some real stability in the month of September over the past few years. And we're generally anticipating that to continue into the rest of the fourth quarter here.
Well, also 2023 statistically was one of the worst years in real estate in decades, right? And so I think 2023 had people not sure what was going to happen in 2024. And when you're showing May, I mean, that's typically in our market anyway, that starts when our spring season is February, March, April, and things are closing in May, right? So I think seeing those increase in numbers makes a lot more sense. 2024 has been a tough year for a lot of people as well. But again, if they're priced well, they're sold, they're positioned well, they're going to sell well. And I think consumer confidence has been changing a little bit. And that I don't think it's one thing, but I think it's a number of those factors that show a result in a positive number.
Yeah, no, definitely a matrix of variables. And so part of that, as you just mentioned, is days to sell. So when we look at supply and demand and what direction is the market moving, what's the velocity of the market, days to sell is one of the keys, and it's up. It's no surprise. Year over year, up 15%, month to month, just right around 7%. And we're at 61 days on the market. So if we look back towards the beginning of the year, January, February, we were well into the 70s. Same thing in December was just over 60. So we're kind of at the upper end. This is the highest number of days to sell for September over the past several years. And we're anticipating this to marginally increase, as typically it will, into the fourth quarter, but still very manageable and still relatively healthy. Once you get over 100 days on the market, then it becomes more of an indicator that we parse out how's that impacting values and pricing. But right now, appears to be relatively stable compared to the past couple of years anyway. And the number of new listings. So this is the other portion, the yin to the yang, if you will, of the supply demand dynamic is, well, how many new listings are hitting the market? What we don't want to see is an environment where sales are going down and the number of listings are going up. That means the monthly housing inventory is climbing, moves towards the glut word, which we don't ever want to hear is, you don't want to have a glut of available listings. That puts downward pressure on pricing. And we can see that compared to previous years, as well as, earlier in the year, the number of new listings is down. And Elizabeth, maybe you could talk a little bit about some of the sellers that you've been working with, talking to, that decided, hey, maybe we're going to wait. And what was their thinking about putting their home on the market now?
Yeah, when we talk to our sellers, we really want to understand their motivation and what their needs are, right? Some sellers want to list, and some want to list to sell. Some have to sell. Some are moving out of the city, out of the state, around the country. And so what we're seeing is those listings typically in the fall that are on the market, those are the people that have to sell for a specific reason. And the buyers, we tell our sellers too, the buyers that are in the market are serious buyers. So those that have a little bit more flexibility, again, they're watching the media thinking, oh, things are going to pick up, or they're going to be a better market, or it's going to be, crazy pricing again, which we don't think is going to happen, but we can just show them the historical data and the numbers and figure out and understand what their motivations. A number of our sellers are waiting till the spring. They have extra work they want to do to make sure it's ready for the market. They have, flexibility in the fact that their kids are still in school, so they don't want to sell too early. So those that don't have an immediate reason to sell, we have a whole bunch of them that are just waiting until the February, March timeframe. So it looks like that's what's happening across the city as well, because there's not a lot of people moving in and out as much as they might have thought in the previous quarters or years. But for ours, they're just waiting. We've got a number of them that are on the market right now because they have to sell for a reason. A lot of job relocations actually outside of Austin, which was surprising because I don't usually have a lot of my sellers transferring outside of the city or the state. This fall we do.
Interesting. Yeah, we have a number of clients also that are postponing going live on the MLS into the first, maybe even the second quarter of next year. And again, that sort of, volume regulator in terms of the number of listings. It's good for the folks that own homes and are looking to sell their home for the highest possible price. So this is basically healthy and in alignment with the trend that we've seen over the past several months anyway. And then sale price, list price ratio, Elizabeth, this is an unprecedented moment where we actually have 2 0 indicators that there's been no measurable change year to year or month to month. Sale price, list price ratio is the ultimate market sentiment indicator. This past month, 96.85. In other words, homes sold for just under 97% of what they were listed for. And that's almost exactly the same what it was last year and last month. So let's talk market sentiment briefly. You mentioned that there are some various forces at work, whether it be interest rates, seasonality, kids, the school season, the cycle of people going back to school, all that sort of thing. What do you feel out there right now, Elizabeth, in terms of the market sentiment? Are people more bullish, bearish? What are you seeing out there?
I have a number of my clients and investors that are all looking for deals, and they are just putting offers in that don't make a lot of sense. We're educating them and letting them know that, we don't have any data to support some of these offers, but some of them, again, just want to see what they can get. They want to get a good deal. And that changes from person to person. I always want to ask each client, okay, what does a good deal mean to you? Right? It's not always just about the numbers, but our sellers are, I like seeing these stats on the 97% because that seems a bit accurate with what we're seeing. we're pricing our homes well, so our listings are selling really really well. It's some of our buyers that I feel are being a little bit unrealistic. My sellers that are being unrealistic, they're sitting on the market still and they're chasing the market a little bit down. But I set those expectations up front and I show them what the stats would be. So that could bring the stats down a little. It'd be interesting to see what these numbers look like correlated to days on market, and the ones that are priced really well and that are selling, sooner than the average days on market, what their list to sell price ratio looks like.
Totally agree. All right. And
But 97% in this market isn't a bad stat, actually.
97% is great.
Yeah.
Yeah. What's really crazy is 111%. And
Yeah. Yeah.
111%, that's where
That was,
rational, that's I think is it Warren Buffett that would refer to that as irrational exuberance. And
well, and now what's happening too is some of those people that were moved into the city and they've lost their jobs or they have to move out. Now they're in a situation where they're underwater. I mean, some of the prices that, to your point earlier, they're not sustainable. They didn't make any sense. It wasn't a fun market. And now they're in a situation where they're having to sell and they're taking a huge loss. We've got two of those clients right now. And it's challenging because nothing we do is going to help them bridge that gap because
right,
they just got stuck in an unfortunate market. When they had to move here, they were transferred here where the prices went through the roof and they can't stay here long enough to let that catch up to the pricing that they paid back then.
right. Yeah. So when we talk about risk in real estate, in my experience, typically risk only comes from one source, and that's time. If you've got an unlimited timeline, you really don't have any risk. If you've got
Right.
years and years and years when you can sell, you can ride the ups and downs of the market. When you've got a limited amount of time and a deadline, that's when risk becomes a very real variable. And we generally guide our clients into the 3 to 5 year rule, where, the expectation when you're purchasing a home, owner occupied home, is, plan on living there 3 to 5 years at least to make sure that you're going to exit the property with some equity. It doesn't necessarily always take that long. Sometimes people can turn around and sell a home quicker. But again, you get into the risk of potentially being a little bit upside down. Or if you bought at the wrong time and have to sell at the wrong time, well, that's a recipe that nobody wants to see. But unfortunately, that does happen in the marketplace for some of the buyers and sellers. So we're expecting this to kind of hover in that 96 to 97% range, which generally speaking is a healthy number, and we'll continue to report as this particular metric moves at glacial speed. And so these minor fluctuations are interesting because they almost always move in the direction of the rest of the data and show us the market sentiment. So let's get into the listing inventory barometer, the supply demand coverage ratio. I came up with this back during COVID when COVID first hit, and we were trying to understand what the heck is going on in the market. And real estate statistics are interesting in that they're largely historical. They're reflecting what's happened in the past. It's highly fragmented from location to location. Different MLSs, different states have their own reporting protocols. And so we were scrambling back when COVID first really started to impact with the lockdown. What statistics are the freshest, the most current that we can look at to try to interpret the market? And I came up with the number of new listings per week and the number of pending sales in that same week. And, if you look at the statistics that ABOR puts out, they're almost always a month behind, sometimes more, maybe a little bit less, but you're not going to see real-time reporting other than this particular statistic. And so basically what it means is it's the number of new listings in a week divided by the number of pending sales. So the 100% mark is where we kind of draw the line, literally, if you will. And if there were 100 new listings in a week and 100 pending sales, that means that the new listings were 100% absorbed. Every new listing had a commensurate sale, and it was a net neutral. The weeks where there were more listings than sales, you can see all these lines above 100%. And then a few weeks, particularly during the holidays, the end of the year, you're going to see weeks where there were more sales than listings, not enough listings to cover the demand. So we take a look at this from a few different angles. And here you can see the number of new listings per week going back to early May and the number of pending sales. Well, over the past 5 weeks or so, the number of new listings have averaged a little bit over 200 new listings a week, and the number of pending sales have been shy of that, more in the 160 range, and you've got a gap. So over 100%, the supply exceeded the demand for these consecutive weeks. You can see that last week it was more extreme than the prior weeks. And so based on this, you would think that the actual inventory is going up. But there's been a really interesting phenomenon over the past several months where expired and withdrawn listings have actually been drawing the net results down to a decrease in the number of listings available in a month. And so here we can see the same stat, 249 new listings, 134 pending sales. And so that looks like, there was 115 listings added for last week. But the truth of it, and I was surprised by the size of the number, 191 listings expired and withdrawn.
It's a lot.
It's a lot. But when you look back and aggregate this, over the past few months, dating back to the beginning of July, we've had significant reduction in the number of listings because of these expired and withdrawn listings. And again, just as an old school analyst, supply and demand, if the number of sales are going down, and we know that that's been the case, as long as the number of listings are moving in the same direction, you're going to have market stability. If there were no expired and withdrawn listings, and these were the actual numbers of listings that were being added each week as the net result, we would have a truly growing inventory, which would begin to impact pricing. But really, because of the expired and withdrawns, that's not what we're seeing. And then finally, Elizabeth, another new item for the monthly report. This is the first time I'm showing this chart, which is showing the net growth or retraction in the number of listings per week. And so here you can see the current past week with a relatively large number. And again, this would be 100 listings lost or consumed in any given week. And then these are the weeks where there were more listings than pending sales or even withdrawn and expired. So this is the absolute net, and it includes expired and withdrawn listings as well. What are your thoughts on this? Is this a surprising number to you, Elizabeth? What does this have you thinking?
It's not surprising, but it is surprising to see it graphed out like this. I know the conversations that a lot of us, Shapiro Group as well, we all network and communicate with top producers from around the city. So the conversations absolutely support this. But to see it graphed like this is pretty surprising.
Yeah, I was pretty surprised too. And when we've been tracking the expireds and withdrawns on and off, but it really does seem like since July, this has been the untold story. And in fact, really the saving grace, if you will, of the Austin market's health. And part of that, we believe, I'm curious about your comments, people who have their mindset on a high price, like you were talking about earlier, a lot of those folks are withdrawing their listing or letting it expire because they don't want to sell for less than they want.
Right.
And so one of the reasons why the average price has continued to go up a little bit year over year is because the sales that would happen at lower prices in many cases aren't happening because the sellers are not accepting those low offers in a lot of cases. So there's a lot of interesting moving parts And we'll continue to keep an eye on the absolute net growth and retraction through the fourth quarter into the new year as we try to make sense of this Austin real estate market. So here we go. You talked about interest rates earlier, market expectations. We're back up a little bit. Rates dropped a little bit after the Fed announced the reduction in the funds rate. And now, about a week or so after that, they've ticked back up a little bit. We can see that, we're nowhere near the 52-week average, which was just under 7%, right at where it's been over the past month. Compare it to last year, it's down significantly, but up a little bit over the past week. Elizabeth, what are your thoughts on interest rates? Where are we now, and what are people thinking out there?
Yeah, the interest rate conversation's been interesting to me because I didn't think they would move much. I didn't think they were going to affect too much, and they haven't. And I mean, I have clients last year that, and the year before that actually locked into a 9% rate for certain reasons, and because now they can control the property and then refinance later down the road. So it really just depends on what the motivations are. I mean, these rates in the grand scheme of things, I know they're not in the threes and the fours like we saw, but that's when prices went completely crazy as well. And I think if we got back to that, we would see a lot of the same. And then people are overpaying and it's just not as sustainable. So, and then if you look at people that have been in the business even longer, when rates were 8%, 10%, 15%, things like that. I mean, 6% rate, a 30-year fix is not a bad rate in my opinion. And there's a lot of negotiating that can happen with buy downs and concessions and things like that. So it's really how you present the offer, how you look at the numbers, and how you have your agent negotiate on your behalf. But I didn't think they would move all that much. They keep saying, well, they might move again, but they're fluctuating very small. It's not these huge price adjustments that people were expecting because they are misunderstanding what the media is saying or the misinformation that's out there. So I think these are pretty much in line with what we were expecting.
Yeah. And you mentioned the long-term perspective. I started in real estate back in 1982.
Okay, so you've got a whole big picture of all of this.
It's fascinating. When I studied real estate in college, and when I got out of school in '82, part of the program was to have a sales license, which I did. So I was a young salesperson. This was back in the Phoenix metro area, Arizona. Interest rates were 18%, and back then I specialized in expired listings, and I bought my first house. This is one of my favorite sayings: is when rates dropped to 12%, Elizabeth. When rates dropped to 12%, I was like, I'm in. I don't know if they're ever going to go any lower than this. And,
Yeah.
So 6%, that's a beautiful number from my standpoint. The key is getting the home at the right price and then getting that, mortgage payment where it's comfortable for people. So,
I bought just last year, a year and a half ago, I bought one and I'm at 9.5% on mine. But here's the reality. Long term, it's exactly what I was looking for. I've been looking for it. It's a very unique property. If rates go down, then 10, 20, 30 people are going to want that property. So I at least can control it for paying a premium for a short period of time, but long-term gain. So I'm buying in the market as well. Just like others are, I'm putting my money where my mouth is and I'm buying as well.
absolutely. And the concept of refinancing is powerful because anybody who was shopping for a home back in the crazy market knows how frustrating it is to be 15th in line with your full price offer.
Exactly.
So get the property that fits your lifestyle, and then let the market gyrations work in your favor and lock in a rate when the market allows you to do that. But properties come and go, the market keeps coming around, and so if you've been in the game long enough, you can see those patterns. And that's part of our job, is to help our clients who may not have the benefit of 40 or 50 years of doing this, to kind of help people make sense of their own real estate journey. And so I agree. I don't think we're going to see wild fluctuations off of these numbers, but we'll continue to report each month and let everybody know how the market is behaving. And so, Elizabeth, that was our in-town report.
Okay.
Now we take a look outside the city limits. One of the things that is particularly frustrating about national stats and even local stats that come out is they combine the whole, you know, Austin Round Rock MSA as if it was one entity. And it is in a sense, but when it comes to making sense of real estate value, there's a big difference between what's going on in town and outside the city limits. And so we're going to take a look at some of these numbers. Now, the monthly housing inventory is about the same in town, somewhere between 4.5 and 5.5 month inventory outside the city limits. Obviously, there are a lot more listings. You're talking about a much larger geographical area, higher numbers of sales, but relative relationship between the number of active listings, the number of sales that are happening in the market pretty much correlates to that same 4.5, 5.5 month inventory. And again, this is very close to a balanced market, and that's borne out in some of the other statistics that we'll continue to look at now in this report. Number of sales per month, Elizabeth, they're down outside the city limits, very much in alignment with what they were in town. This is the lowest number of sales over the past 5 or so years for the month of September. Have you been doing any business outside the city limits, or are you guys mostly focused in town?
I do everything because we're referral based. So we just closed something in Liberty Hill. We've got things in Round Rock. We're all over the place. So it's interesting. I would have thought actually that the numbers would have been reversed between in town and out of the city limits.
Okay.
Austin has just gotten so expensive for so many people. It's pushed them out, not only with pricing, but also taxes, property taxes, and things like that. So I would have thought these numbers would have been different.
Okay. Average sale price, a little bit different than in town. Obviously, the actual numbers are much lower outside the city limits, but also the year over year numbers a bit softer, down just over 6% month to month, down a little bit over 3%, kind of hovering at 474 going into the reporting for the fourth quarter. We're expecting this to kind of hover in that same area, just shy of 500,000. And then the forecast into the new year would be to ultimately get back to that 500,000 level and beyond. And again, we'll report the numbers, but nothing too dramatic. But we do see a downward trend over the past couple years here, particularly for the month of September outside the city limits. And days on market, Elizabeth, they are in alignment with a softening market. They're up the exact same amount back last month. 65 days on market was the average last year at this time, 65 days. So we're at 72 days on the market, average sales outside the city limits, right around the ballpark of March earlier this year, not quite where it was towards November, December, January, February. What are your thoughts on days to sell outside the city limits?
Yeah, we've experienced that quite a bit as well. And again, it comes back to pricing and making sure, the home is absolutely presentable. So gone are the days where you can just kind of put a sign in the yard and hope that you're going to look better than the next guy. Especially, we have a lot of builders outside the city
Right.
that when you're competing with builders, it is so hard for those resales to compete. Builders can, offer incentives, offer all sorts of upgrades, offer different things that resales can't. And so what we're finding is our clients that are outside the city limits for sure, we have to have our painters in, we have to have our landscapers in, we have to have, from the very beginning, curb appeal all the way in throughout. We need to make sure that that house is picture perfect, ready to go, because otherwise it's going to sit there, or there's so much more competition, especially with the builders, that you're not gonna be the one that's chosen.
Absolutely. That's a very good point. Presentation is key. You only get that one chance to make a great first impression. And with online home search and Zillow and everything else, you're just one click away from people moving on to the next property. And so it's a really good point about being ready to make a great first impression if you want to get the highest possible price. New listings up a little bit year over year, down month to month. all relatively in the same ballpark here, just over 2,700 homes hitting the market outside the city limits for September. And again, if this was moving dramatically in the upward direction while the number of sales are moving down, we would have a different story. But as long as things are generally moving in the same direction regarding supply and demand, we're going to have relative stability in pricing. And again, we'll continue to report the numbers as they come out and see how that's impacting your decision to buy or sell in the current market. And then the sale to list price ratio, again, extremely stable, no movement month to month, basically the same, and generally the same year over year, just down 0.1%, hovering just over 97%. We talked about that in town. It's a good number. If all our listings sold at 97% of the list price, we would generally be happy. And Elizabeth, any thoughts on this number?
No, I'd have to look at my numbers and stats. I want to run mine to see kind of where they come in with the average, but it seems to be they seem to be doing what the typical markets show that they're doing.
Right, and that's the interesting thing about this stat. It's a voodoo stat. There's a lot of moving pieces. You know, what was the home listed for? What was the negotiation strength? What was the condition of the property relative to the price? And in spite of all that, because we're dealing with a reasonable sized data set, the numbers appear to be in alignment with the other trends. And I've become increasingly fond of this statistic as a guide for where we're going. So this is basically telling me that, again, stability is kind of this market's middle name. And if that changes, you'll hear it here on our monthly market report. So that's it. We've gone through the in-town and outside city limit report. If you'd like more information on our research analysis, we've got a ton of videos that are on YouTube. You can find those with this easy to remember URL, realestatevideohub.com. Elizabeth, want to thank you for joining us today. Any closing thoughts for our audience?
Foremost, thank you for having me. I would just say for the audience, it's opportunity, right? Great things happen in down or softer markets, and the prices are not going to keep going down. The prices are going to continue when the markets go up and down all the time. And Austin is a great place, and surrounding areas is a great place to invest and buy, no matter what. So I always tell people it's a great opportunity to buy and look at what you want your portfolio to look like, and just make sure that you're well represented. And especially with the Shapiro team, you guys know numbers inside and out. You know how to focus on projections, and so I think it's a great opportunity if buyers are truly in the market, sellers are truly in the market, investors especially. Just making sure you're well armed and well equipped with all the right data, and I think people do really well long term.
Absolutely. And so if you are considering buying or selling in the current market, the market statistics are great to give context. But as we have talked about in the past, real estate is hyper-local. And in fact, when it's your money, when it's your sale or your purchase, it's super hyper-local. So we have our contact information down below. Please do reach out. We're happy to meet with you at no cost or obligation to talk about your real estate situation, the real estate market as it relates to you, and see how we can provide value. So with that, I'd like to thank you for joining us today. Elizabeth, once again, thank you so much for taking time to visit with us. So if you got a lot out of this video, please like it, share it. That helps other people find our content. And we thank you for joining us today.